Today is Monday, August 25th, and I am slightly down today, almost 1%. However, my IRA is not looking too hot, down almost 4%. And I'm assuming AMD is having a bad day because main position in my Roth IRA is a leveraged ETF on AMD. So I assume it is not having a good day, which kind of sucks because my Roth IRA was almost at 2,000. But now it's all the way back down to 1,600. So it is what it is. But anyways, the NASDAQ, it was down earlier this morning, and then it was up, and now it's back down. So just kind of flat, not really moving around. And if we take a look at my recent transactions, I did go ahead and sell another covered call on Robinhood, even though it has lost a lot of its value. Because as you can see, it used to be a little above 420 back when I sold it on the 18th. And so now it's just above 280. But it is what it is. Just decided to go ahead and do it just to slightly hedge my account a little bit more, even though there is still a chance for Robinhood to hit 125 and 150. And part of that is you could make an argument that Robinhood is still undervalued. I believe with the most recent information, the free cash flow per share of Robinhood is just above $5. At $100 a share, the free cash flow yield is about 5%. And, keep in mind, people pay a 5% free cash flow yield for real estate, right? REITs or dividend stocks, like consumer stable stocks. But I'm getting that in Robinhood, right? Which is more of a fintech, financial services, growth stock, that type of a company. And that has a free cash flow yield of 5%. So you could make an argument that Robinhood is still undervalued, but I can't get too greedy. I could have closed out this 125 covered call back when Robinhood dipped under $100 last week, but it is what it is. I'm not going to get too greedy. If it does end up hitting 125 by December, most likely I will roll this one out over into next year, so 2026. So I just hedge myself a little bit more going into next year. So for anybody that doesn't know how to do that, I know I get some comments from people asking like to do some live trading and whatnot, and maybe in the future I will do some live trading. But if you just go ahead and click roll position, we can take my December one, roll it into, let's say, March, and up the strike a little bit. So maybe we'll go to 140. And so I can collect slightly above $140, roll this out into next year, and I slightly hedge myself a little bit more. So I could do something like this if Robinhood does hit 125 this year, which there is a possibility of doing so. So if we take a look at the daily performances, Nike is actually green today, surprisingly, and a lot of clothing stocks were green today. Not all of them. I believe Lulu was actually down, but for the most part, I would say clothing stocks had an okay day. Robinhood, of course, down over 1%, Palantir down over 1%, Pepsi down 1%, Honest. For some reason, Honest just can't catch a break. It's down almost 3% today. However, SoFi, the shining star recently, up over 4.5% today, and for the week is up over 9%. So it's kind of been the shining star recently. If we take a look at today's standouts, of course, Kava just cannot catch a break, down another 4.4%. And of course, I've already told you guys Nike has been doing very well recently. Let's take a look at the price. Yeah, so I believe Nike hit $80 today. So it is back up to 80, which is good. And SoFi, of course, just went over it. But REPX, I put RPX on here because I believe there was an M&A deal on the news. I heard on Bloomberg these two energy companies are merging together, or one is getting bought out. So some oil stocks have been catching a bid, and this past week REPX is up over 7%. So I thought that was something worth noting. So that's why it's on today's standouts. But basically, the situation that I'm kind of hoping for in the ideal scenario for me to finish out the rest of this year is Robinhood just kind of hovers around, or like I said, it bounces up to 125, maybe 150 if we're lucky. Obviously, that would mean one of my covered calls is underwater. But like I said, I can just roll it out, and even if my shares get called away, it's called away at pretty high prices. And the rest of my covered calls, of course, are at 170. So if it, for some reason, if Robinhood just surges another 70% from here and my 170s are underwater, at that point, I'm just going to have to let it go. Even though, like I said, you can make an argument that Robinhood is undervalued right now, 5% free cash flow yield. I'm just not willing to take that risk going into next year, especially with a stock like Robinhood. Fintech, very volatile. In the last bear market, I believe it dropped like 90%, I want to say. And I don't know if it's going to drop 90% in the next bear market. It would have to take something super serious to get Robinhood to drop another 90% in the next bear market. But I do think, $80 a share is still a possibility for Robinhood to retest in the next bear market. And all that means is it comes back down and retests that old high, right? So we had that breakout going past the old all-time high of $85, and then it comes back down. I guess I can just go ahead and show you guys. We'll just pull up the advanced chart for Robinhood. And of course, I don't really like using the advanced charts on Robinhood, to be honest. I much rather would use TradingView. But since we're already on Robinhood, I'll just go ahead and show you guys. So this old all-time high here of $85, we did have a breakout, and we did have one more leg up before a little cool down period recently. But I do think there is a possibility for Robinhood to come back down and retest 85. Or if it gets pretty bad, I do think there's a possibility for Robinhood to go back down to the 60s to retest this moving average right here. So like I said, selling covered calls, just kind of preparing myself a little bit, even though it is going to be a bumpy ride if it goes all the way down to the 70s. But basically my plan is, as Robinhood keeps going up to the 125s, 150s, I'm going to sell a lot closer to the money, right? So let's say by December, it's 125. I'm going to take my 125 right here, my 125 covered call, roll that out into next year, and then sell more covered calls near the strike or near the market price, right? So if Robinhood surges to 130, going into next year, I'm going to roll out this 125, maybe even roll out some of my 170s, but then possibly sell some 2026 covered calls around 170, 160, right near a little bit closer to where the market price is. So the premiums will be a lot bigger. So that's kind of where I'm at with Robinhood. Like I said, Palantir, I've already maxed out my covered calls, so I'm just riding that one. But as for my Roth IRA, I mean, it pretty much depends on AMD. Hopefully AMD will come back from here. But yeah, let's get to some of your guys' comments now. Clayton, I forgot to put this in the last video, but you did ask me if I could do like some kind of a rating for fans' portfolio, or just getting some general thoughts on it. I mean, I don't have anything against it. If you guys just want to comment in the comment section some of your top holdings, I'll kind of give my general thoughts on it. Obviously, don't put any personal information and whatnot. You can just put like my number one position is like what SoFi or whatever, and my number two position is whatever, blah blah blah, and then just kind of give me just your general strategy, or if you have one, whatever. Like, I'm trying to sell covered calls on this, whatever. My entry price was this. Just like a little bit of details, and then I wouldn't be against giving my general thoughts on like a example portfolio. And Chicken Joe, it looks like your comment did not age very well, because Honest is down another 3% today, which is unfortunate for both you and I. But it is what it is. I think Honest is still undervalued. Possibility for it to get back to $5, then $10 a share, possibly $15 a share. So still riding it out. I still like the company. I like its products. But yeah, we'll see where Honest goes. And Leave No Evident said closed out those Robinhood covered calls 2 days ago. 34K in 2 weeks. That's crazy, dude. Man, I mean, I remember when I barely even made 34K a year, and you did that in 2 weeks, which is very impressive. And congrats to you. And you also make a good point. Robinhood potentially could be included in the SP 500. I always forget about that. And of course, banking is going to come to more customers eventually, but they're super slow on it. And I have a feeling that Robinhood banking won't be as big of a success as people hype it up to be. And what I mean by that is SoFi is already doing a lot of things to compete with Robinhood. So right now with SoFi, I haven't tested this out yet, but apparently if you have direct deposit with SoFi, or if you pay $10 a month for the subscription, I would much rather do direct deposit, just so you guys can save some money if you choose to test out SoFi. But anyways, they do have this feature where you can call an actual SoFi financial advisor just because you're a SoFi member, which is crazy. And if that is true, I think that's actually better than what Robinhood has right now. Because with Robinhood, you have to have like this concierge service, I think. You have to be a high net worth client, and it's like Robinhood is trying to be JP Morgan or something. But I think SoFi is making a lot of moves to take a lot of those banking customers. So I don't know if Robinhood banking is going to be as successful as some of their previous rollouts, like futures, for example. That I guess was a success. Index options trading on Robinhood is already popular, so index options is just a natural fit. But banking wise, or event contracts, that's another thing that kind of fits with that retail trading app type of feeling. But when it comes to banking, if Robinhood can take those premium features that are only reserved for high net worth clients and, somehow get that to basically all gold customers, well then, yeah, I guess that is competition for SoFi. But until then, I think SoFi banking wise is ahead. But anyways, you did take massive profits on your covered calls, so I guess it doesn't really matter to you if it goes up or down from here. But yeah, a Robinhood S&P 500 inclusion could definitely push it to 125. And T, yeah, have you heard of Big Bear AI? No, I have not, but just my general opinions on all these AI companies. I think it's gonna eventually end up like the tech bubble, where during the tech bubble you had all of these .com companies that were all getting hyped up, but most of them obviously did not survive. And I think something similar will happen with all of these AI companies. Like a lot of them are going to get wiped out, and then just the premium ones at the top are going to be left. And as for your question, with someone just coming into the market right now, what are the 5 stocks I would recommend? Well, if you watched my last video, you'll know my last video, which is free advice, LOL. You'll know that giving advice is kind of hard, especially in the financial space, but also like with life in general. Like if I were to give you 5 stocks right now and they all just end up being bangers, then you're going to think I'm a genius, but it's not really because I'm a genius. It's just because it ended up being that way. But also, if I give you 5 stocks right now and the market crashes, then you're just going to hate me the rest of your life. So, it's kind of hard to answer those types of questions. What I would suggest is just, watch my videos, I guess, spend some time in the market before you kind of go off and do your own things. Like just be more familiar with the markets and just investing in general. And over time, I think you'll kind of get it. Or if you know any financial advisors, of course, you could talk with them and just kind of learn. But obviously, you need time and experience. Then you'll start to have an understanding of it. And of course, eventually, maybe you will find the next Robinhood or Palantir stock. But better than yesterday, as do you and can you live off of your account? So in my monthly update videos, so at the end of every month, I do like a little update video showing how much money I made for the past month. And as of right now, no, I cannot. I think on a good month, I make like $1,500 off of like option premiums, trading and whatnot. So, I can't really live off of that. But is it a possibility in the future? Of course. But I don't think it'll be a possibility to completely live on it until I have like maybe 1 million in my brokerage account, along with potentially this YouTube taking off a little bit. Then maybe I could live off of it. But I think I'm still a long ways to go.